Konnichiwa and Salam Alaikum. In this week's edition, we'll talk about corporate news. In the UAE this week, there's been ongoing speculation about a merger between the Nasdaq Dubai Exchange and the Dubai financial market. The two exchanges are set to merge their trading systems and part of their back office over the coming month, which could be a prelude to a merger between the two exchanges. Over 90% of revenues on the Nasdaq Dubai Exchange come from DP World, and therefore the earnings position of Nasdaq Dubai is likely to be still negative, given that it's such a young exchange with a sophisticated product offering and high overheads. The pricing that DFM may potentially pay for Nasdaq Dubai will be very important in determining whether the deal is a good one for the DFM. The volumes traded on the DFM have increased significantly in the second half of Ramadan, averaging around 800 million dirhams per day. This is very good for DFM's earnings, and looking forward into the fourth quarter, we believe that earnings will improve based on values traded increasing to over 1 billion dirhams per day. We have a 12-month price target of 2 dirhams and 22 fils on DFM stock and an overweight recommendation. Following on from our comments in last week's edition, other market analysts are predicting that property prices around the metro area will rise by around 10%. This directly benefits EMA, which has a high land bank and also apartment complex bank and mall leverage within the metro region, and its rental income accounts for around 21% of revenue during 2009. The UAE cabinet in Abu Dhabi is discussing increasing the foreign ownership in the UAE to 100% from 49% at present. This would be a key catalyst for increasing foreign investment in the UAE, and in particular medium and large-sized businesses. In addition to these measures, the recent reduction of the minimum capital requirement from 150,000 dirhams to zero is also an incentive for foreign investors to set up business here in the UAE. In other news, Air Arabia's 40% joint venture with Travco in Egypt is aiming to begin flying out of as much as 5 airports in Egypt by the end of 2009. The share price has rallied on the back of this news. We still have a 12-month target of 1 dirham and 33 fils and an overweight recommendation on Air Arabia. Construction company Arabtech expects that Saudi Arabia will be the largest market for its projects in 3 to 4 years. The company has existing projects, Laymar Towers and Princess Noor University, and is bidding for new contracts both in the civil space and also on the infrastructure side. The Saudi Arabian market is expected to grow strongly, backed by strong fiscal revenues and modernisation of property in the country. Arabtech has also reiterated that it expects to begin construction on the Okhtar Center in Russia, which is a 10 billion dirham project, in March or April next year, pending weather conditions and the final approval from the key client, Gazprom. We have an overweight recommendation on Arabtech and a price target of 4.18 dirhams. Contractors in the UAE are reportedly threatening legal action against district cooling provider Tabreed, listed on the DFM, due to the non-payment of monies owed to the contractors. Tabreed still has liquidity issues in that it has large outgoings with a high capex expenditure and low incomings due to a very light cash flow, heavy capital intensive business model. Therefore, we remain underweight on Tabreed and believe that the share price will continue to outperform in the short term.